Hello, I'm Bernard Hickey from Interest.co.nz and welcome to a special economic weather report where we look ahead to next Friday when the Statistics New Zealand releases its March quarter GDP figures. So this will give us an indication of how the economy travelled in the first quarter of this year to March 31st. Now, economists are expecting a 0.3% reduction in GDP in the quarter, and that from a year ago, the same quarter a year ago, GDP will be up only 2.1%. That's a significant slowing of annual economic growth. And you can see here from this chart that for the last few years we've been on a downward trend. We had a blip up, quite a strong one up in 2007 as all the spending from the housing boom washed through the economy, but now it's on the way down again. There's a few factors at work here. Firstly, consumer spending growth basically has ground to a halt. And you can see here from this chart, retail sales in some cases are down, and that's quite a big drop from previous years. The housing market's in a slump. Volumes of house sales are down nearly 50%, and house prices are just starting to fall. People generally feel less wealthy and less willing to go out and spend money on consumer goods. So there's a squeeze on disposable income too. As fuel prices and food prices rise, we've got less money around to spend on other things. And also real interest rates, the ones we actually pay, particularly for fixed mortgage rates, they've been rising and will continue to rise for a good chunk of people. About $40 billion worth of mortgages will be rolled over. These are 2-year mortgages, rolled over in the next 6 months or so, and their interest rates will go from around 8.5% to about perhaps 9.5%. So that's a big hit for people. So even though the rate's been quoted in the banks maybe lower in recent months, what people are actually paying compared with 2 years ago is a significant increase. Also, the manufacturing sector is struggling with a high dollar and slowing growth globally. And you can see here from this chart the performance of manufacturing index have had a significant slowdown in the last 6 months. The high New Zealand dollar over the last couple of years is really biting, and the slowing of growth is slowing demand for our manufactured goods overseas. The drought has also caused grief for our farmers. Remember, this is the first quarter, the summer quarter, and in the Waikato in particular, we saw a real problem with drought cutting dairy farm output. And spot power prices rose sharply as well, and that forced some producers, Tiwai Point, the aluminium smelter, to cut back on output, and that will be measured in the GDP figures coming out on Friday. However, on the other side of the ledger, we've had a very strong series of farm prices coming through, and that will help offset some of the damage from the drought. And we've also seen the beginning of the Tui oil field, and that output has helped our export receipts. Remember though, this is looking very much in the rear vision mirror. These are first quarter figures for the March quarter. That's nearly 3 months ago. And in fact, when we see the numbers, it'll just be 10 days left to the end of the second quarter. And many economists now are looking ahead to what's happening in that second quarter. And it's clear that it's not much better than the first. Growth could actually be flat or maybe even slightly lower. We could actually see another retraction in the second quarter. And when that happens, we have technically a recession, 2 consecutive quarters of negative GDP growth. However, what does this all mean for interest rates? A technical recession could actually strengthen the Reserve Bank's ability to cut interest rates later this year. And most economists are saying we will see a cut in September and maybe another one in December. But we still have an inflation problem that we need to beat. And the Reserve Bank doesn't have a lot of room to cut the official cash rate much. And I think if the OCR, the official cash rate, does fall, it won't be by much later this year. And anyway, most of those falls are already priced in, and we've seen those come through in lower fixed mortgage rates in the last couple of weeks. So the overall picture, the economy is slowing down sharply. It may already be in recession. There is some room for interest rates to fall, but not much. I'm Bernard Hickey. That was an economic weather report for Interest.co.nz.